Conversation going now. Betsey Stevenson is a professor of public policy at the University of Michigan and a former chief economist of the U.S. Department of Labor, as well as a former economic advisor to former President Barack Obama. Betsey, thanks very much for your time today. We appreciate it.
It's great to be here.
So it is a big day and a lot of attention on whatever Jay Powell does and says. Let's just start there. What do you think we're going to hear and see today?
I do think a lot of what today is about is the Fed trying to think about how people are going to interpret whatever decision they make. Right? If they decide to go with zero, which, as you noted, some people think that they should take a pause. We don't really know what's going on with the banking situation, the banking situation. I'm going to hesitate to call it a crisis, right. But the challenges that we've had, that is going to lead to some credit tightening. I feel confident in the direction. We will see some credit tightening coming out of what we've just seen in banking. But is that a 25 basis point credit tightening coming from the banks? Is it a 50? Is it 75? Is it 150? I've heard numbers all over the place. The Fed's going to be thinking hard about that. But I also think it's important to realize that the Fed just did a bunch of easing by lending banks money. Banks have borrowed $300 billion from the Fed, meaning that the Fed has put $300 billion back on its balance sheets that it had tried to unwind as part of its tightening process. All of that's got to be taken into account. And then they've got to figure out, what are you going to hear? If you hear zero, are you going to think the Fed knows something that you don't know about how perilous the banks are? Because I might think that. I probably will think if they do zero, maybe the banking situation is a little bit worse than I thought, because they have insight into these banks that the rest of us do not have. If they go with 25 basis points, they're trying to say to the market, look, inflation's a priority, and we really believe that we've got this contained. So I think that that's part of it. Now, you've heard from other people that if they see 25 basis points, they're going to think, no, the Fed is completely disregarding the needs of the banking situation, and that's going to rattle markets more. So I think that's what they got to figure out, and figuring out the psychology of how markets are going to react to the implicit news is actually quite difficult. So this is without a doubt the hardest meeting that they have faced, I think, in a really long time.
Betsey, you have some great analysis on the employment picture and recessionary risks, and I do want to get to that. But just very quickly before we do, given what you just said, does there have to be a broader conversation among Fed officials around what they all basically say over the coming days? Our last guest, a markets guest, said it's one thing to hear whatever we hear today, but if you've got a course of different Fed officials that are constantly being asked about this stuff and offering up different comments at this point, that could be just more hurtful than helpful.
I do think they're going to have to think really hard about what kind of forward guidance they give, both today and obviously in the coming days and weeks. One of the things that comes out today is, of course, their forecasts. And I think maybe more than whether it's a 0 or 25 basis point rise today, people are going to be looking to see what are they doing to the terminal rate. Because I think, if you looked just 2 weeks ago, Chair Powell was saying, we're going to have to go further. We're going to have to raise rates further. I think that that's probably going to get pulled back, but that's something we're going to be looking at. We're going to be looking at the full range of their forecasts and listening for their rationale for why they made the decision that they made. And then that rationale is going to mean we're going to be listening to everything everybody says. I think that this Fed, Chair Powell in particular, has said repeatedly that he is going, and the board is going to make decisions based on the data that comes in. Well, what's happening right now is we're getting new news every single day about prices, what's happening with inflation, about what's happening with banking, and what's happening with employment. And they got to take all of that news into account and adjust course. So I think at this point, promising anything about the future would be a little bit silly because we really don't know what the future is going to hold.
Okay, Betsey, as promised, I want to squeeze two more in here. So given your understanding of the labor market, even though we've seen tons of layoff announcements, there are a lot of people that would routinely say, well, you can continue to fight inflation because the jobs market is still relatively tight. What would you say about the employment picture right now?
You know, look, the employment picture is great for workers. Lots of job opportunities out there. We're seeing a lot of hiring. You know, the thing that is, so far, it actually hasn't really contributed to inflationary pressure because we've seen labor force participation rise. For some groups of workers in the United States, it's higher than it was prior to the pandemic. So we've seen, you know, and yet there is actually still space for more workers to come into the labor market. So it's kind of hard to judge what does the labor market mean for inflationary pressures right now because the labor market's not stable because we're still recovering from the pandemic. But the thing I would say that I think is kind of amusing or worrisome is that the Fed has said repeatedly, we are not going to blink or flinch if a bunch of people lose their jobs. So then the question is, are they going to blink or flinch if some billionaires lose some money? And that's been, you know, are they going to flinch on Wall Street, you know, looking at the stock market? Are they going to flinch with a banking crisis?
Right.
You know, they have to, financial stability affects all of us. And as annoying as it is that it tends to be protecting the money of wealthy people, we actually have to protect the institutions. But I do think that, you know, it raises the fact that we've all been staring and waiting for the employment situation to crack, and that's not what cracked first. It was banking.
Betsey, I'm almost out of time here, but you know, you're a faculty research associate at the National Bureau of Economic Research, and we still can't say whether we are in a recession or whatever's going on because we wait for that official definition by the NBER. What would you say on the recession reality at this point?
I think we actually can say the reason the NBER hasn't declared a recession is because we're not in one. We are clearly not in a recession. Growth is positive. Employment growth is positive. That's what a recession is all about. There is an issue about a risk of a recession. The NBER doesn't forecast recessions. They call them when they see them. There's not one to be seen right now. There's always a risk of a recession. Did it get a little bit riskier with what's going on with banking? Absolutely. But I would still say it's more likely than not that we don't have a recession.
All right.